Hello everybody, this is Prince. It's 11th of March 2021. I'm gonna do a very quick analysis of NASDAQ March contract that's being traded at the moment. I've hidden my open trades here just for sake of keeping the DNTS strategy confidential over the internet. So let's go in steps a bit. Usually in the training sessions and workshops we hold, I always mention that it is always possible in normal cases for an index to drop 8 to 12%. So let us just calculate. If the high was approximately at 13,900, you can see, I'm just pulling out the calculator. The PC is slow because I'm running the recording program. Alright, so 13,900 minus 8%, which is 12,788. This is 8, and even if I want to subtract 13,900 minus 12%, this would be 12,232. All right, so only the bad thing was for the DNTS strategy this time that maximum number of buys they were open. Let's just begin with general support and resistance concept. I've hidden the periods right now. We have a resistance from this sector, from this price area, and we have a support here, and we did have some old support on this price, in this price area. And the next upcoming resistance levels are these. Let's put the periods on. First of all, you have to understand the major support area was around 12,490 level. You can see this support is coming from the December and month of January, end of year and beginning of year. Usually the lows of December or January always try to act as a support, and the market did break the support by almost 280 points or 285 points. It could not balance and continue the downtrend. So you can see we couldn't see the fall. Now always while trading, the first point is capital preservation. All right, second, but before capital preservation you have to be disciplined with the strategy. I do not hold more than 30 positions of sell. Okay, why do we need a capital preservation? Because now a lot of people are now asking, how about closing the cells, exiting the cells? Why you're not exiting the cells? Yes, I am not exiting the cells because I want to maintain maximum ratio or be in maximum semi hedge so that I can preserve more capital so I can trade further. Now I shouldn't say this, but I am holding 26 buys and 24 sells of 0.01 lot, okay, which makes now I have almost 0.02 positions at hold. Now once the market starts trading towards the upside, it catches the uptrend, because the overall trend on monthly charts and weekly charts of NASDAQ is always towards the upside. Okay, each 100 points I am gaining $40. Of course I have a floating loss, but that floating loss is being reduced by $40 per 100 points, right? Now if the market went 1,000 points in my favor, my loss is reduced by $400. Okay, the alternate strategy, which I have a plan B, if the market starts to pick up the speed before the contract expiration, from the 26 buys I have, okay, or the 24 sells I have, the first two from 24, the first two will be exited at break even and converted to buys if the market catches a strong uptrend. All right, so this is just a brief summary which I shouldn't have discussed, but anyway, here we go, because some people did insist me to talk about it. Now this is a 4-hour chart, and let's analyze back. All right, let's go a little bit back in time. The regular crash, the crash that we see here on which happened during February and March, This is almost a $3,000 crash, 3,000 points crash, and $3,000 also, because it was the COVID-19 crisis that struck the market. So this is a big crash. But generally speaking, now if I measure this crash, I can draw a trend line here. Okay. Now if I use this trend line, this is almost a move of 1,600 points. Now if I take this line and try to analyze these crashes which happened before, these are 800 900 point crash. This crash is approximately like 1,400, and here this is the biggest crash that happened in September, right? This is 1,800 points. So an 1,800 points crash is also something, it's a normal and regular drop. So the market shouldn't crash more than 1,800 points. Let me just get rid of this trend line. Now let's analyze the trend. Even now, if we analyze the trend is really towards the upside. I'll add just one single moving average here, which could be just a 30 exponential moving average. We on the daily chart, yes, the prices are below the moving averages, but they're still not trending. But if I go on weekly chart, this moving average is acting as a support. Prices when they're above on the long-term time frames, price when it's above the moving average, we are in an uptrend. If I go on the monthly chart, we are still in an uptrend. All right, and this is now a talk based only on the moving average. We are speaking from technical perspective. Now, ignoring the technical perspective, you can see this was a breakout zone, right, last year, and when the prices wanted to fall, this breakout area, which was a resistance, turned into a decent support, and you can see the prices jumped approximately 1,100 points, which is still a confirmation we are in an uptrend and resistance is still acting as a support. We should always keep in mind, if this is a resistance, when the price goes above it and breaks above it, it will generally come back, test this area, and bounce back to continue towards the upside. Okay, this we discussed in training in the chapter of price structures and price patterns. Now let's go to the 4-hour chart, and you can also see on the 4-hour chart that these were the highs. I'll switch to daily, maybe it will give you a good picture. See, this is the daily chart. This was a resistance during the month of September. Let's see what month exactly it is. Yes, it is September. We fell 1,800 points, then the market started to come up. This resistance got broken in the beginning of December. The price tried to test, retest, it tried to go down again, but there were multiple levels of resistance. We have one resistance here, first one is here, second and third. It reversed back again from this level. Now this whole zone is acting as a support, and the price couldn't go below this area. It failed. This was January's low, and the market tried to break below the January's low, but it couldn't. Now we have multiple W patterns. What is a W pattern? This is a W pattern. This is the neckline. This is the neckline, and above the neckline we go for buys. But because I already have existing positions, nobody knows the trend. Even when I execute the strategy, I anticipate, but the markets are not guaranteed. Even the trading style that we have of DNTS is a low risk, but the word risk is still attached. All right, so you have a W pattern here on the daily chart. You have a W pattern here on the 4-hour chart. You can see that this is a very clear W. Okay, so if the W size is 560 and you're trading with the risk reward ratio of 1 to 2, your target is going to be 560 multiplied by 2 times. Okay, so even on short-term time frames right now, we have multiple W's. We have multiple W's. This is another W being formed on the top. Of course, this is acting as a resistance for the time being, but we are still in an uptrend. Prices on the short-term time frames are also above the 30 moving averages. This is the 1-hour chart. This is your This is a 30-minute chart, 15 minutes and 5 minutes. So 1 hour, 30 minutes, 1 hour, 4 hour. We're above the moving averages. So we've gone through, first thing that we covered in this video is the current scenario that we're going through, and the objective is maximum capital preservation. Second thing we discussed is the support and resistance levels and the drops that we can expect, and we have witnessed the drop already. It's an enough drop in as per my analysis and experience. Third, we discussed from technical perspective trading with the moving averages. The prices are above the moving averages on short term and long-term time frames, not the medium terms. I hope this is clear. Now let us say some people may be whining, crying, complaining on what has happened, why this is happening. Now listen, DNTS is a decent strategy when the market's really volatile, and it performs really well when the market, you take it from support and resistance levels of major trading areas, right? There's no doubt about it. The strategy has performed very well for the past 1 year. Always there's a drawdown to it, like I cannot open more than 30 positions, and I've lost $430 to $380 in the past. This time maybe my loss is going to be $1,000, but I am losing from my profits, so it doesn't hurt me much. An alternate strategy is dollar cost averaging strategy. If my objective is only to make an income or just book anything, I can recover my funds in different ways. Like I can start spacing of 200 points, okay, and I could place you can say almost 11 trades of 0.01 size each, 0.01 size each, okay, and the account, a decent trading account can always handle this. Let's say the market went against me by 2,000 points. 12,800 is 1,000, 11,800 is 2,000. So I would be losing like minus $400 here, and minus, you could say 360. I would be losing approximately $2,200 only. But simultaneously for each position I am booking $40 at each 200 points. You know what I'm saying? And $40 if I make a day as an average, as per the current country I'm residing, as per the current economy, it's fine. I can do decent stuff with $40 a day as well, on top of the salary. Of course the long-term vision is to be independent, but you have to use a systematic approach. So this is just a quick video of my feedback on what's going on in the market. Let's do some technical analysis here. We have a high resistance here. We had lower lows being formed on 1 hour chart, lower lows, lower lows, lower lows, lower lows, and lower highs, lower highs, lower highs. So the market is in a downtrend, but now we can see a seller failure that is occurring at this lows. We had the market taking a pause. It tried to break again below it. It couldn't. The buyers took over. Again, it did try to break again, but the buyers really took over and they broke the neckline, indicating that the buyers are taking over the market. Formation of lower lows has completely failed, but you have a trend line here. It will act as a challenge. You need a couple of green candles stabilizing above this trend line so that the market can go up. And as per my current situation on the trading account, I'm just in a maximum recovery mode, and the losses are going to be from the profits. I'm approximating maybe $1,000 or $1,500 loss will be booked from my personal profits, but again, this can always be recovered with less headache, less stress, and it's not a big deal, right? Because I have a 5-year trading plan. I hope this video helps. If you have any questions, we have our own specialized WhatsApp group for the members. You can share it. You can post your questions there. My preference, if you're watching this video, it's going to be on YouTube. Please post your comments on the YouTube channel so that others can also see and benefit from the communication. Again, this video is nothing more than my personal opinion. It is not a financial advice in any way. Financial trading is risky. Trade at your own risk. You're responsible yourself on how you use the information discussed in this video. I'm not an accredited financial advisor, and I'm not a certified technical analyst. I'm talking only from my personal experience. Wish you a great trading week and have a great day. And thank you for your time for listening to this video. If you like the video, please give it a thumbs up, and if you don't like it, give it a thumbs down. I'm out. Bye bye for now.